The British pound is in a precarious position, and it's all eyes on the UK's inflation data to see what happens next. But here's where it gets controversial. While the pound sterling, GBP, is struggling, the US dollar, USD, isn't exactly thriving either, caught in the crossfire of a prolonged government shutdown and delayed economic data releases. So, which currency will come out on top in this tug-of-war? Let's dive in. For the fourth day in a row, the pound sterling to US dollar pair is losing ground, hovering around 1.3380 during Wednesday's Asian trading session. The pressure is mounting as investors await the UK's Consumer Price Index, CPI, and Retail Price Index data for September, numbers that could make or break the pound's near-term trajectory. And this is the part most people miss. The UK government's fiscal woes are adding fuel to the fire. Borrowing has surged by £7.2 billion more than expected in the first half of the fiscal year, pushing the budget deficit to £99.8 billion. That's £7.2 billion higher than the Office for Budget Responsibilities, OBR, forecast, thanks in part to debt interest payments skyrocketing 66% to a record £9.7 billion in September. On the flip side, the USD struggles are creating a strange dynamic. The ongoing U.S. government shutdown, now in its fourth week, is causing uncertainty, with the Senate repeatedly failing to pass a funding measure. This has delayed key economic data releases, including the highly anticipated non-farm payrolls, NFP, report, leaving the Federal Reserve, Fed, in a tricky spot. Here's the kicker. Despite the chaos, a Reuters poll shows that 115 out of 117 economists predict the Fed will cut interest rates by 25 basis points to 3.75% to 4.00% on October 29th. For the year, 83 economists expect 2 rate cuts, while 32 foresee just 1. But is this enough to give the USD a leg up over the GBP? Now, let's take a step back and talk about the pound sterling itself. Did you know it's the world's oldest currency, dating back to 886 AD? It's also the fourth most traded currency globally, accounting for 12% of all foreign exchange transactions, or about $630 billion daily. Its most popular pairs include pound sterling to US dollar, nicknamed cable, pound sterling to Japanese yen, the dragon, and euro to pound sterling. The Bank of England, BOE, is the mastermind behind its value, primarily through monetary policy aimed at maintaining a 2% inflation rate. When inflation spikes, the BOE raises interest rates to cool things down, making the UK more attractive to global investors. Conversely, when inflation dips too low, they lower rates to stimulate growth. Economic data plays a starring role here too. Strong GDP, manufacturing and services PMIs, and employment figures can boost the pound by attracting foreign investment and potentially prompting the BOE to hike rates. Weak data, however, can send it tumbling. Another critical indicator is the trade balance, the difference between exports and imports. A positive balance strengthens the currency, while a negative one weakens it. But here's a thought-provoking question. With the UK's fiscal challenges and the US's political gridlock, which currency's fundamentals are more likely to prevail in the long run? So what do you think? Is the GBP's current dip a buying opportunity, or is the USD's uncertainty too much to ignore? Let us know in the comments. We'd love to hear your take.